Hey guys, it's Luke. Welcome again once more to my YouTube videos, in which I will be depicting something very important for you today. Again, as every video, I like to present something new. So this time I'm going to be talking about IPDA look back ranges, the one we went over last or the one before last video. However, in a simplified way, easier that a 5-year-old can even implement in a different way. Okay, and you don't have to do some guesswork. It's just plug and play. Okay. Now, before I get that, once you guys learn it, you will see something like this. Okay. But before I get into that, I just want to apologize that I'm not active on Discord. I'm busy for the next 2 weeks, but today I took a few trades, and yesterday my friend, she took a few trades were just amazing, just based on ICT. Okay. So and based on these levels, I'm going to show you. So let's go ahead and get into what how to draw what I have on the chart right now. Okay, so you can see here on the chart we have 20, 40, 60 days, the highs marked in red and the lows marked in red. Of course, you can ignore the anything else that is not here, so NWG rejection blocks, two rejection blocks. Okay, but what you want to do is, let me open a new tab.
Anlamı nedir?
So what you want to do is, I see taught many different ways to do this, but there's 3 or 4 ways that he publicly said, and there's two or three more ways he said in short, and there's one way, yeah, which are a bit more complicated. But remember how I said to draw your thing, you anchor your thing, your IPDA level from high, lower, low. So this short chart right here, this market structure, you anchor it here and you look back 20 days, 40 days, 60 days. Okay, this might be hard because it requires a bit of guesswork, but what I'm going to be teaching you today is much simpler. All you have to do is go to the start of the first month, sorry, of the current month. So let's say we're in May, you go to the 1 May. Now pay attention, I'm not saying 1 May, 1 May, 1 April, 1 September, 1 December. I'm asking the first day of the month. So this case, first day of the month was actually 1. But if I go back to like April, also first day of April was on here. But what I'm trying to say is sometimes a weekend happens, so make sure you choose the first day of the month. Okay, where it says, so here's Friday, for example, is the first day of this month. So just look at the first day. It can be 3, it can be 4, no, it can be like 1 or 2 or 3 of the month, right? Why? Because it can be on a weekend. So just make sure that you put it onto the first day of the month. So here, 1st of May is the first day, right? 30 April, 1st of May. So now you plot a vertical line. Now what do you want to do? You want to move your line 20 bars back, put a line, 40 bars back, put a line, 60 bars back, put a line back. Alright, and you can go ahead and label this. So this will be 20 days, 40 days, 60 days. Okay, now you want to find the high and low respectively of each of these channels. So here's the lowest low. I will give that blue color for 20 days. What's the lowest low in here? Well, it can be this one, but if you pay attention, this is actually this low here, which is and the anchoring point. We still include that in, guys. Take it in, extend it out, and now we go to 60 days. Where's the low? Is there anything here? Nope. So this is the low. Extend it out. You can label them respectively. So this was 20, 40 days. Just so you don't get confused when you go on the lower time frames. 60 days. Now do the same thing for the highs. So in 20 days, the highest high is here. Just make sure. Yep. 40 days. This is the high, which is the all-time high as well, which I noticed today. And for this one, it's this one right here. So 60 days. My bad. Alright, and give them red color so you don't get confused. Alright, so at the start of the month, here's what it starts. So every month you do this, every single month, start of the month. So let's say we're here. Well, mark the new month opened, and you want to mark the the opening price of every month. So this is May open. Give it like a yellow color. Okay. Now, so here at the start of this month, the IPDA is gonna look for mainly focused on the 20 days. 40 days and 60 may not be that good because it's far away, but 20 days is usually good for intraday trading. So here's the opening of this day. The algorithm can go down to 40 days to this one, to any of these blue lines to sweep them, or any of the ones above us, right? So it can go either this way or this way. Below each of these lines is the most liquid areas in the market, okay? Where the high hedge funds and the institutions and big boys players are in, okay? So we want to see. Now usually the month of May is bearish because of seasonality, but we sometimes that may not be the case. So you have to pay attention to price action. So what does the algorithm wants us to do? So you can see that we started with the month, and the next day we pumped, and then pumped again, and we took 60 days low, right? So that was the drawn liquidity. We took that, so we expect a reversal down, and then we targeted 40, and then go back up to the next one, okay? But what it did is just close above 60, okay? Now, why didn't do any reaction here? Because we already played this level down here. We played it again down here, so here it's not even used, okay? It's no longer in use. It's not a fresh low. You want to be looking for, this is really important, take notes. You want to be looking for fresh lows and highs and any PD areas. So you'll start with mitigation blocks, volume imbalances, breaker blocks, volume imbalances, order blocks, rejection blocks, old highs, old lows, in that order, okay? So here we have this low which is being used, it's being exhausted. However, we have this FVG, bearish FVG, which is, you can see it's never been tested, so it's unexhausted, it's not exhausted, it's fresh, so this can be a target of liquidity where the algorithm may want to price to. We see this order block right here, right?
İsmi lazım olmayan bir arkadaş var. İsmini vermeyeceğim. Buraya çok sikelen bir arkadaş.
Put it like this.
Bu neden geldi? Hiç de anlamadım.
This is the order block. You want to mark the opening price of it. Okay, label it, and the midpoint of it. What else is there? Well, there is this 60 days high which been exhausted. What's not exhausted? 20 days high. We have this high. 40 days high is unexhausted. So above us, there's only literally, if you want, I can even delete this one because it's not really that important. But we have this FVG, we have this order block, and we have these two liquidity poles. Okay, below us we only have this 40. It's not been touched. It's been touched here actually, so we can even delete that. But I like to keep them on my thing just for the sake of it. But you can go ahead and delete them. And we have this 20. So below us we only have this 20 low, and we have this order block which has been used. So literally nothing here except this small volume imbalance here and this low. Above us there is, like I said, this FEG, this and this that the algorithm wants to target. Okay, now since we know that we expect a reversal at the 40 days or 60 days, maybe let's say you don't even use this, okay? For us, we had a nice future side actually, that the market may want to start reversing at something this point. But imagine you didn't, you just starting fresh. So you want to see what the market does. It's gonna go to any of these levels I mentioned, above us or below us. So what did it do? It went up, took the 60, and it filled this FEG. And if you remember, ICT was telling us that this FEG here last week on those big landmines, or the week before, I think, I'm not sure, I think it's last week, he had, when he went live 3 times, he said this is his drawn liquidity. Why? Because this is the only FEG that's not been tested, and it's in the IPD level. So anything below this area, remember, from the 60 high to the 60 low to the 20 low. This is the only one in premium, right? I think I'll run it opposite way. This is the only FEG in the premium, okay? And we're bullish right now. We want to target, this is his first target, and we accomplished that, and that was a beautiful call by him. You can go ahead and watch his streams. He mentioned it 3 times on 3 different occasions, on 3 different videos. But anyway, I don't like talking about the past, so I want to come back where we're here, okay? But you can see that the algorithm will be targeting any unexhausted IPDA rate or old high and low within these 24 and 60 days, okay? I don't care about this one. Why? Because it's being used. I don't care about this FEG here. Why? Because it's beyond our 60-day range, okay? I don't care about this breaker block right here, okay, because it's beyond our range. This is where we look. From anything after this 60 days, we don't look at it. So from here to here is what we look at. Anything unexhausted. So here we have these 3 that I mentioned. So the algorithm went up. Yesterday I think it closed at 60 days high. Again, we don't pay much attention because it's been exhausted, but it's still important level you can pay attention to. Algorithm can absolutely reject from here, but it didn't. So it first went to the FEG, then the midpoint of this order block, open price of this order block, then the midpoint of this order block, and now we closed, and then we ended the day yesterday above the midpoint. So remember, if I tell you if we close above the midpoint or above or below the midpoint of the order block, we'll probably take out the high or the low, because depending on what type of order block it is. But that's an extra information. But let's get back. So now you know how to draw them, and your chart should look exactly like mine. Okay, so now let's go back to 5 minute. Actually, I forgot to say something else. Remember I told you the PD area matrix, mitigation block, blah blah blah blah blah, order block, FEGs, breaker blocks. Well, we missed one which is really important, and it's one of the most important ones. It's more important than FEGs, than order blocks, than breaker blocks. Anything is the best PD array is the highs and lows. The one right after it is rejection blocks. So how do you do rejection block? This is the rejection blocks. And we have another one, I think. No, we only have one rejection block. We have only one rejection block, okay? Go ahead and give it rejection block. Okay? Now go on for that 4 hour. And you can keep this on for the whole month, so you just do it once. Okay. I see another rejection block right here. Hold on. I only see another rejection block right here, yeah. But this time we label it 4 hours, okay? Anything else is on the daily. This is the only one we check. We also have this FEG. That's been tested. This has been tested, this has been tested. There's nothing there actually. Only this FEG. Okay, this is where we ended the day yesterday, so this is where we touched. So we have these. Okay, so now let's go back on the 5 minute. Now retail traders would have went long on today. ICT traders would have looked for shorts. Yes, retail traders were smart on this one. Why? Because they see support. So most likely they're going to be longing and the market will pump up, right? So this is where they got it right. ICT traders, on the other hand, will see that, and especially that yesterday PPI was bearish, so we expect that. Okay, again we're going to be bearish. Why? Because we also take into account seasonality, because we're ICT traders, so bearish months are May and June. So what else is there to show us that we're bearish? Well, we have this 4 hour bearish FEG, which we rejected from today. Bearish 4 hour FEG. We didn't get a daily structural change properly. We did have one, but it was not. It didn't take out the lows. Remember? So we have remember this chosh right here, right? Oops, this one right here. Well, to get a chosh, you have to get a high, high, high, lower, low. It's like a breaker. Here we have a high, higher, high, lower, high, higher, high. Okay, so we have to get. If this low took out this low, then we would have had low, high, lower, low, higher, high. Then we would have got actual structure change. So ICT traders were a bit lacking, and I'm one of them. But I wanted to approach this a little bit different. I'm going to show you exactly how. What else is there? Well, just above us, we have this 4-hour fair value gap, rejection block right here, daily. We have another rejection block right here. So this here is a beautiful area to go short, right? To take out these equal lows, maybe even these, and continue the momentum down, right? However, I wanted to take a long today. Why? Because thanks to the IPDA levels, I know that the algorithm is going to be targeting them. Okay? Let's go back here. I see that we are here, and let me do it like this. This is today. I wanted us to come to take out this 20 days at least, or maybe to this rejection block, and then maybe dump. But I wanted to take out this 20 days because it's so close to it, it might as well take it out. It wants to take it out, okay? I didn't know it was gonna take the 40 days. My eyes was just literally at these 40 days, 20 days, okay? Just like that. So I wanted to come to take out the 20 days. But in front of us there's a fair value gap, and a rejection block, and another rejection block. Someone will be like, why would you long this area? Well, this is the case for today. Why? Because we have CPI. CPI is known to destroy anything that would normally the algorithm will respect. So the algorithm should respect the especially high time frame PD areas like the 4-hour fair value gap, these daily rejection block, especially because it's the strongest PD array. And we have two of them, alright? So you should be going short, right? So it was today. I think it was right here. This is today, okay? So let me just put this so you guys can see. Okay, this is today. So best to do is to short here, right? But thanks to the IPDA levels, I know the algorithm is put on to off mode. What I mean by that, there will be manual intervention, and this automation will be turned off. So there's going to be real human intervention, taking the price whatever they want. They want to dump it, they can dump it. They want to pump it, they can pump it to a level they want to do it. Okay. So I thought maybe using CPI we can straight away get to this level and just call it a day, right? Because CPI is a smoke screen to get us to where the manual intervention wants us to go, right? So I turned all these rejection blocks and fair value gaps off. I presumed, just like retail, there isn't anything there. The algorithm wants to go somewhere. Where does it want to go to? Well, it wants to go to the 20 days. So I took a long. Of course, it's 100% gambling. Was it a gamble? 100% gamble. Do I recommend it? Never. Was it luck? Was I lucky? 100% lucky. It could have went the other way without even questioning me. Okay. Anyway, so you can see the algorithm. It pumped. It went straight up to where? Rejection block. It chilled at the rejection block. Look at the support. It cracked here. Now it formed this bull flag where retail is gonna go long. What did the market do? Once it hits this and stays here, that means it's not gonna do anything. It's not gonna continue until market open. Market open happened right here. Market open crashed down. Why? Because to take out anybody who's been longing, anybody who's late to the game, they wanna think this is bull flag. Retail's gonna go long here. They took them out, and I was sure that this low is gonna be taken out. Why? This is from experience. Why? It's because we pumped 500 ticks. Market on CPI is unlikely to drop that again 500 ticks, right? While it's very close to its where it wants to go. Okay. Now, after market opened, took out these lows. Now it can continue up. It went straight to our 20 days, and then eventually it's gonna go to 40 days. It stopped one tick before it, right there. But that's also the all-time high, so expect something like that. But what I wanted to show is my approach actually from yesterday and today. So this was it, yeah. You see, I expected the market to go up, run to this level. Why? Because I wanted to think like that. The manual intervention, not like the algorithm, like the manual intervention. If I was the owner of the algorithm, where would I want to go? Well, I want to go here. Why don't I want to go down? Why? Because BPI. This is BPI yesterday. It did all the damage. Look how many sessions it took. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Almost 11 and a half sessions in a single wake down. Okay? This is here. PPI did all the work, and I'm gonna tell you my theory, what I was thinking yesterday and today, which helped me to work on today. But see, CPI didn't even flinch. It opened right here, 8:30, and it pumped. It didn't even do any manipulation. It doesn't have to, because PPI did all the work already. So this was my plan from yesterday. Look, I wanted one thing. I wanted PPI to drop hard as hell, not look like a manipulation move. I want it to drop real hard, induce everybody to think that we're going to be so bearish, and when CPI happens today, it's going to be super bearish as well. But I want it, after it closes, take out as much liquidity as it can. I want it to start crawling up slowly. Okay, and it did that. Once it did that, it closed above it, like closed the day bullishly, like around here. I was like, okay, this here was actually a real manipulation move to get everybody enticed to go short, because this move here, when you see it live, it was scary as hell. It did not look like manipulation. It looked like an actual drop. Like, it looked like distribution. And that's what I wanted to do. I wanted to look like distribution down, so everybody would start looking back into bearishness. Okay? But that's not what I'm saying. I don't want to say, oh, if it pumps, manipulates up, then we're going to go down. No, I have one single plan, and that's what allowed me to trade CPI today. I wanted it to manipulate down, but look like a distribution, and then call itself back up and close positively. If it did that, then today I'm gonna take trade on CPI with which also still gamble, to be honest with you, but I will take a long on CPI. That's the only time, regardless of how many PDA is here, I'm gonna take a long, because it will want to go to this 20 days. Okay, that's the only thing left. We took the 4 hour. We took out the 4 hour FVG, we took out the opening price of the order block, we took the midpoint of the order block, and we're around here. So the only thing left is literally the 20 days. Okay, ignore the ones in yellow, those are 40 hours, 40 minutes, 4 hours, sorry. So my friend yesterday, I was gonna take a trade yesterday, and so she's my real life friend, by the way. She asked me, Luke, I want to take a trade on PPI. I told her the same scenario, and she said, okay, I'm gonna take a long here and put my stop loss so far down, probably as far as I can go. I think she went in with, I don't know, 1 mini. So I think her stop loss was only to May 10. That's as much as she can have with the daily drawdown on top step. Yeah, around here. So she said, I'm gonna go long here, somewhere around here, like early in the day. Sorry, my bad. She wanted to go long in Asia, where it's the lowest of the day, she thought. She said, I'm gonna put my stop loss not here. I'm gonna put it below New York AM on May 10, because it's fairly far away. Like, it's 300 ticks. I'm pretty sure it's not gonna go down 300 ticks, right? If it's not gonna manipulate, it's gonna go down this much. And I told her, put a stop loss here, and she thought this would be safe. I told her, how about this, my friend? Why don't you place your buy limit order where you want to place your stop loss? Okay? She said, what? I said, instead of entering here and putting stop loss here, put your limit order here. If you get filled in, you're going to be turtle swooping, and you're just going to be turtle swooping at its finest. And she's like, okay. So it's like, she didn't understand what it is, but she did it. She, instead of entering here, she entered actually along. She closed it like a few minutes later. She put a limit order here. She said, what if I don't get triggered? I was like, if this actually gonna be manipulation down by PPI to get us up back to our original target, which is the 20 days, then it's mostly want to take as much liquidity as it wants. Okay, so you see, I can show you her thing later on in the Discord when I'm back. Market went down, even though this was a sweep setup. Here, you see, sweep of Asia high, chosh, multiple choshes you can enter. I know any of them. I told her, limit order here. She went down, market dumped on PPI. It dumped, it triggered her buy order, and it pumped, and she closed it around here. So she made, I think, around 200 ticks, something like this. around, she closed at 200 ticks, just so 200 ticks with one contract, and she made like, damn, that was beautiful. So she total flipped, and that was beautiful. Now, that was good for her. For me, what was good is that we did this manipulation down. It looked really scary, guys. Look how this would have looked like. Imagine this whole candle is just red. Doesn't look like manipulation, does it? But then it started crawling up, and then once we closed the day, I was like, okay, this here just gave me the hint that CPI today is gonna go up. It doesn't have to even to manipulate. It just wants to go up. Of course, it's an educated guess. It could have done anything else. But why I wanted to see this is because I want these 4-hour fair value gaps and rejection blocks to be as if they're thin air. It doesn't exist. And boom, I took a long right here. Boom. I closed it. I think I won one contract, so I closed the exactly rejection block. I didn't want to risk anymore because that was a big trade. Oops, that was a big trade. 470. Okay. I closed it at 515. Sorry, not 515. So just below the rejection block. 515. Yeah, just 3 points away. Just it might reverse from there. You can see it went up, it closed here and started reversing. Could have did it. We would have did this and closed around here. Anyway, and due to the volatility, I just wanted to risk it. Anyway, that was beautiful. Then I exactly outlined what else happened later on, and you can see that because this pumped 500 ticks and it still didn't take its target 20 days, so market open still has its objective. So market open is tradable. Why? Because the objective have not been taken. If PCPI took out the 20 days in a single run, then market open would be just like this. It would be just like this. But it didn't. Market opened, came down. We still have a crosshair, so AM session still has objectives, daily objectives. Even in fact, it's 20 days back, so it's a monthly objective kind of. When we say 20, 40, 60 days, we're talking about dating days. So in 1 month of trading, there's only 20 days, so it's actually a month. We went and did a monthly objective right there, and after that, it just did whatever it wants to do. But I was careless at that moment. In fact, I realized today that the 40-day is actually the all-time high. But damn. So that was beautiful. You guys saw how you draw these lines. You can draw them on Dixie, draw them on AES, draw them on anything. You can just go on anything. Let me show you this example. And where's the start of the month? Right here. You just draw back 20 days, 40 days, and 60 days. Find the lows, the highs, the lows, the high, the low, the high and the low. And then you will see the algorithm would want to target them. For example, here it's still targeting the 40-day high. 20-day high was taken also today, sorry, right here on ES, on Dixie. So this gives you a simplified approach that all of you can do it in like 5 minutes. It wouldn't take you 5 minutes. You can use it for the whole month. Next month, you can delete everything and repeat. So for Dixie, the start of the month, okay, so you can see that the low of Dixie is here, the high is here, 40 days is here, the high is here and here. Okay, and you can guys label it respectively. Where's the low of here? So this was today. This was yesterday actually here. Or actually, we're not looking at today, we're looking at the whole month. So this is where the month started. We had these levels, okay? We have this FVG, which has been, if I put it like this is how it would look like for you start of the month. We have this FVG which we use, we have this FVG which not being used. We have this order block. We have this order block here, you can draw a line. We have this FVG here, which you can draw a line. These are the only unexhausted, untouched PDA arrays. And the lows we mentioned is this one, the 40-day high, 60-day high, 40-day, 20-day low, 40-day low, 60-day low, 40-day low. We have these targets. So we have 1, 2, 3, 4, 5. These ones has been tested already. So what's not been tested? This one, and this one, and this one. So then you can see that the market will start running to these levels. And if VIX is targeting these levels, then all the market's going to be pumping. Alright. Now, just to not waste any much time, I'm going to get off this level, and you see today Dixie took out these levels, but they've been exhausted. It filled this FEG. It filled this FEG, right? You can see it. It filled, took out this low, these two levels, this FEG, and now it's back into this order block. So does it reverse from here and take out these highs and come back to this high, or does it come back to the 20-day low? Remember to label them, okay? So in this run, it filled this FEG and these two levels, which have been exhausted but still important. I'll still target them, and the only thing left, to be honest with you, is this order block here, the opening price of it, and this order block here, opening price of it, and of course I'm going to delete these, and these 20-day low, and the 60-day low, which has been exhausted here, so I can even remove it. Anything that's not been exhausted, I can remove it, and just like that. So we have this high, and this low, and this order block, and this order block which we ended the day. Look at this, guys. What's that? Look around here. Look at the opening price here. Sorry, closing price here. What does it say? 104, 122, right here. What's the low? What's the close of this? Well, it's not closed yet, but what's it right now? What's the low? 142. Like, oh, sorry about that. You see, guys? Market dropped straight to this order block, and it chilled here. Now, the only thing the market can do is go to this low, this order block, and then reverse back up to where? Until this high. Okay. So, but I think we'll still remain go down until when? This is where we anchored it. So count 20 days forward. So in few days, at maybe Wednesday, 29 May, we might expect a reversal. It might stay going down bearish, allowing ES and NQ to make all-time highs, and eventually it will take out this low and this low. Okay, maybe this low, and then by the time you take out this low, it's gonna finish the 20-day cycle, and then it's gonna continue back up. Maybe take out this high. Okay, but by that time, we'd probably open a new day, so a new month. But yeah, you see, it says June 3. It doesn't say June 1, because probably June 1 and June 2 are Saturday and Sunday. We are talking about trading days. So that's when we'll remove everything and draw everything back again. Alright guys, I hope this was insightful. I made it a bit longer than expected, and my shisha's burnt. I really don't have time for this, but I just wanted to share it. Sorry not for being on Discord. Watch this video a million times again. Share it, okay? Because it's gonna help you a lot, guys. It gives you bias, it gives you targets. Which low do I use? Which order block? Which FPG do I use? This is it, guys. This is it. This is the video you're looking for. Yeah, sorry for not being on Discord. I'll be back in like 2 weeks, okay, guys? Just bear with me. Keep up the hard work. I'm watching from far away, even if I'm not replying. When I come back, I want to see all of you making all that moolah, okay, guys? I love you all, guys. Take care. Peace.